What I'm about to tell you is going to shock you. That $500,000 home doesn't cost the same on a monthly basis from buyer to buyer. And that's not discriminatory or unfair. It's the mortgage world that we live in today. And that can impact how another buyer is going to bid against you in a bidding war. Think about that for a moment. The payment that you're thinking about is different for someone else, and that may empower them to bid differently against you in a bidding war. That $500,000 home's monthly payment can vary dramatically based on a few factors. Let's get into them. Some of those factors you can control, others you cannot. Debt to income ratio, down payment, credit score, and your resulting interest rate, the type of loan that you use, your insurance history, notated on your clue report, and your insurance deductible. Now let's get into the factors that you cannot control. Property taxes, age of the roof, components of the home, think siding, think roof, proximity to a fire station or to a fire hydrant. Flood zone, we have a few of these in Colorado Springs. This is why getting pre-qualified is so vital, so that you know going into a bidding war or a multiple offer situation that you have the upper hand. Assuming that a hard ceiling of X amount of dollars will protect you financially isn't smart money. What do I mean by that? That's kind of realtor speak for you come to me and say, I'm not spending more than X amount. Well, maybe perhaps what you should be saying is, I need to respect my monthly payment limit that I'm qualified for. If you're qualified for $3,000 a month, maybe start looking at homes that are $2,500 a month so that you know in a bidding war that you've got a lot of room to go. Remember, every $10,000 you finance costs you around 60 to 70 bucks a month just in payment difference based on the interest rates of today. Respecting your monthly budget and influencing those factors you can control is smart money. Now that we got that out of the way, let me fix some items that you cannot control. We can negotiate for a roof replacement. Yeah, we do this a lot. Get your home inspector up on the roof right after you've gone under contract. Guess what? More than 25 strikes in 100, you are probably looking at a roof replacement, and you do not want to inherit that problem. We can shop for the right insurance provider. Insurance companies like to add certain properties to their portfolios. Some of them are very adverse to log homes or manufactured homes or even stucco homes. And they may say, look, we don't want your business, but if you do want to go with us, your rate's going to be really, really high. So maybe we need to consider different insurance companies to help bring down your annual premium, which makes then your monthly payment much lower. We can negotiate for the seller to pay some or all of your flood insurance premium. Chances are that seller knows that their home exists or sits in a flood zone, and they may be willing to pay it. I have seen this before, and I'm thinking of a few spots in town, especially down south. We can reassess your property taxes every 2 years. We literally just went through this, and a couple of my past clients reached out to me about it, and we were able to save them tens of thousands of dollars on their assessed value, which results in a lower annual tax bill. In summary, a $500,000 buyer compared to another $500,000 buyer is going to have potentially a dramatically different monthly payment influenced by all those factors I mentioned before. Factors that you can control and factors that you cannot control. Do you agree or disagree? I'd love to get into a discussion with each and every one of you about the various scenarios where monthly payment was dramatically different from one home to the next. Thank you so much for watching this video. I had a lot of fun putting this one together because I think this is a hot button topic. Not every $500,000 home is going to have the same payment. I cannot stress that enough. So thank you for watching.